It's the third week of earnings, and we've got some huge names reporting earnings this week, and a lot of the focus is on tech, especially in America. So coming in today, we've got Ryanair and Tesla. We've got Reckitt Benckiser, Reach, Apple, Microsoft, AMD, and Alphabet on Tuesday. On Wednesday, we've got ITV, Barclays, Facebook, Boeing. Thursday, we've got some other massive names. I'm looking at Amazon on Thursday, and then on Friday we've got more oil-based companies as well as along with NatWest. But on top of that, we also do have the FOMC interest rate decision on Wednesday. So even if these earnings are good, if the FOMC or the Federal Reserve come out and say that they're going to do something with interest rates, or that it could be brought closer, these earnings could be blown out of the water. So this week is probably going to be one of the most volatile weeks in the market, so it's important to make sure that you're positioned right. I'm going to be looking at some of the companies in here, the ones that have got my interest. Most of these are part of the NASDAQ, so it's going to be interesting to see as well about the NASDAQ, because we are reaching the overbought level. But again, we'll just have to see what happens. My name's Tyrone, it's the 26th of July, and you're watching MiniPit. Getting straight into the video, on Monday we've got Ryanair and Tesla. Now I originally did look at Ryanair just on Friday, and I think that Ryanair has a very good possibility that they could do really well in terms of for the airline industry, because I just recently looked at the balance sheet and they've got a very good balance sheet. Yeah, they aren't profitable, but that is what you'd expect given the current situation. But there's a very good possibility that in the next couple of months, sort of 4 to 6 months, we could see that 17 euros to sort of 18 euros hit, and I do think at some point we're going to get over to 20 tomorrow, or should I say, because it is early morning right now. So in a couple of hours time, when they do release their earnings, I would like to see positive earnings come out and see passenger numbers increase, which is very likely. We have had this traffic light system, but we have been able to go abroad, and so, well, in this country we have anyways. Which does mean that I think that the passenger numbers for them are going to be quite good. So I would like to see a rally higher. The next company reporting on, well, in the morning, this afternoon, should I say, will be Tesla. And Tesla is looking very, very mixed. It is, I couldn't say which way this is going to go right now. There is genuinely no direct, there's no technical that is giving you any sort of direction. We do have support-ish. RSI reads 50.4. You've got this support going from the low of 2020, which if we break, we could see a disastrous fall. And I know that one of the really big investors has this massive short position on, which did spook a lot of people. But this trend line is going to be so important, and if numbers are poor, if cars don't deliver, or if there is something in that balance sheet or in the income statement which states that this company's not doing as good as what they say it is, then we break this trend line. The next major level of support is 590, 580 region, but we'll just have to see. I'm going to stay out of Tesla for now. I would like to see it break out higher. If we do break out, we're going to have a bit of a tough resistance at 700. We have tried. We tried last month, but we couldn't do it. Break above 700 takes you towards 800, and then towards that sort of highs of 900. Break above there to 1,000, but you would probably be talking a couple of years, or maybe at least a year before we saw that. It is all about, in a couple of hours' time, or this afternoon, when we see these earnings, if they're good, we could see a breakout towards that 700 level tomorrow, which is a nice 10% increase, and it's a very good possibility we could see that. Facebook was up 5%, or I think its high is almost 6% on Friday, so Tesla could definitely jump 10%. But at the same time, if the results are poor, or they don't miss expectations, then we could see the stock decline. One of the things that I've noticed recently is it's not following the general trend of most of the big tech companies that you've seen. So what I've seen is Amazon, Apple, Google, Facebook, these are all going up, but Tesla is still consolidating, and Tesla is up there with those. It is a mega cap company, and it is just consolidating, and I think that's because these earnings that are coming out this afternoon, they need to be solid earnings to see that next leg higher. We'll just have to see what happens. Overall, I would prefer to be a buyer because there is the moving averages underneath on the weekly time frame and as well on the monthly time frame. We do have the moving averages below, but generally speaking, it is very difficult to say which way Tesla's going to go at the moment in time. Now, going on to Tuesday, because that's Ryanair and Tesla are the only ones on Monday, but going in on to Tuesday, we've got Reach, which they have a lot of news websites. They do a lot of local city websites, so things like Birmingham City Mail, Hull Daily Mail, stuff like that. Reach is a very good company, or in terms of what they do, and the pandemic's one of those things where they've benefited from it. As you can see, they was very high at one point in 2000, and this, you're seeing £6 a share. There's a very good possibility that I would like to see a pullback before I enter into anything like this. So what I'd be looking at for Reach is just simply a pullback. I'd be buying in at around 300 to 250, and then I do think that in the long term we will get to 600. That would be the target. Looking more at the daily time frame, we're just completely overbought by quite a bit. Well, actually not on the RSI, so on the weekly time frame we are overbought. On the daily time frame, there's still actually a chance that we could continue higher, but I wouldn't want to be putting my money in this, even if results are really good. I just want to see a pullback towards these moving averages before I would decide to go long. Reckitt Kaiser is another one they're doing their earnings on Tuesday. Reckitt is a very mixed stock. I'm only looking at this one because it's local to my city. But again, we're just sat in a sort of box really, and it's not moved since 2016 or 2015 even. We saw this drop here, which was the low of the pandemic, and then we saw a huge rally, and I actually thought that this could continue higher, but it didn't. You've seen this flop back to that just sort of moving average as such, and I just don't think that there's enough momentum in this stock to go anywhere, not for at least a couple of years. We could get up to 80, we could get down towards these lows of sort of £60, £55 a share, but the chances are we would rebound. I would buy Reckitt at these lows at 55. I have got no interest at buying at these current levels, and if we do go higher, it is what it is, and I wouldn't be upset that I missed out on a rally as such, because I think that it's just sort of going to stay doing that probably for a while. I think at some point it will break up to the upside, but it's definitely not going to be on Tuesday. If it's good on Tuesday, we could get up to about that 66 level. If it's bad, we could see it towards 59. The range is really small, and so it just doesn't interest me as such, but it'll be interesting though to see how it does. We then do have the big mega cap company Apple, the biggest company in the world, and I'm really hoping that we can see this break higher next month towards 160 to 165 in the next sort of month or two. On the weekly time frame, we're overbought, and on the daily time frame, we're not overbought, but we are trading at high levels. But there's a good possibility on the daily time frame that we could get a potential little rally higher towards those highs. I'd like to see a 1-2% increase on Tuesday, see that up to the highs of around 151, and then potentially higher in the week towards 152, 153. Because it's such a big company, it does move slow. You're not going to get 10-15% moves, or it's unlikely unless they do something absolutely amazing, which there is a good there is a possibility. It happened last time with Microsoft. In the last earnings, Microsoft went up like 6 or 7%. Apple went down around 10% and continued to fall. I know, because unfortunately I was long and I just got absolutely hammered, and I tried trading this stock. I thought that we could continue higher, and we just absolutely flopped, and I lost a lot of money, unfortunately, but it is what it is, and it happens. You pick yourself back up and you carry on. So looking for support on Apple, it's at 143. Unless we see a break above 143, I do see 155 as the medium term sort of target to 160 in the long term. So at some point this year or even in the next month or two. Very good stock, and I think that it will continue high. It is a hold stock. You don't trade that stock, and unfortunately I learned that in the last earnings season. Microsoft is another one. The issue with Microsoft is it's rallied quite a lot already. We're overbought on the daily, we're overbought on the weekly, and we're, I think, overbought on the monthly, which means that there's a good possibility that we could see a little decline. However, it's a very interestingly the rally does look a lot like what I see in the Nasdaq. So if I look at that there, and then I look at the Nasdaq, you see you've got that complete trend where they pretty much just look the same in terms of the way that they're going up, which basically says to me, if this comes down, the Nasdaq is going down. The high that we could potentially get to on this maybe next week is going to be around 296, so $296. If we see that, we're probably going to see the Nasdaq touch around 15,500. Sorry, if it falls, then we could see the Nasdaq pull back. Microsoft and the Nasdaq, and same with Apple, they follow in the same direction. Overall, though, I wouldn't want to be a seller on this. I'd always want to be a buyer. So if it fell, I would be buying a dip, especially with Microsoft as well. But looking at the earnings, what we could see on Tuesday, I think I'd like to see a pullback to provide a buying opportunity. But if we continue higher, 296 is the target with support at around 270. I'd like to be buying in at around 270. Last earnings, I think it was around 240 a share. So we have gained 10% or so since that. We also have AMD, which is due to release on Tuesday. Again, Tuesday is going to be a massive, massive day where we could see the Nasdaq fly higher or not. I really like AMD. I think that it's got a lot more potential to go higher. So I'm targeting around $100 a share for AMD. So looking at Tuesday, I'd be aiming for those highs at around 95. A break above 95 takes you up to that 100 level, which is the level. And we see a break above that, we could be going towards 120, but probably won't happen until next year or later on in the year, or potentially Q1 of 2022. But just looking at sort of the most, let's just say today, tomorrow, what we could potentially see, it does make sense to see this go a little bit higher. And if we do pull back, we've got plenty of support towards 90, and we do have major support at 86. A break below 86 sees us go towards 85. There's always going to be a buying opportunity with AMD, I think. And if we also look at the monthly, what's interesting is back in the 2000 dot-com bubble, we saw this huge rally, and we saw this huge rally again. AMD is being caught out in both of the recessions, but this time I'm confident that this is that break that it needed, and that's because of demand recently in computers and chips and things like that. It makes sense in the 2020s, should we say, to see this go high, because computing is now in huge demand. Back in 2000, 2005, it wasn't in as much of demand as it is now. Demand is only going to get bigger, which leads me to the king of the internet, which is Alphabet or Google. Now, Google is looking very overbought, which is an issue. Again, I'd be a buyer, but I would really want to see a pullback sort of towards that moving average around $2,500 a share. One of the issues with Google is it is an expensive stock to own. It's a bit like Amazon, and it does mean that unless you're using platforms that allow to buy like fractional shares, doesn't mean that you can sort of get in unless you buy an ETF version of it. But overall, I would want to see a pullback before long, because the sky's the limit right now, and we're overbought on everything here and here as well. 3,000 would be your target as such, but I would want to see a pullback towards 2,500 to then go long. I don't know how earnings are going to be. I feel like my worry is that these earnings have been priced in, and it's going to be a buy the rumor, sell the news type thing next week, especially with the FOMC coming out on Wednesday. even if these do go up another 2-3%, they could come crashing down 5% on the following day. And Wednesday, we've got Boeing, Facebook, Deutsche Bank, Rio Tinto, and Aston Martin. I've looked at Aston Martin in the past. It's not a stock that interests me just because of the balance sheet and because of the way I invest. It just doesn't interest me. I get that they're in Formula One and they're doing better, but I think that Mercedes need to come in and buy them. That's my personal opinion. So I'm not going to look at Aston Martin. But overall, I'm not a buyer of the stock, and I don't think I ever will be. Facebook, again, we had this 5% rally, and I'm just sat there thinking, is this pricing in? I feel like this is really pricing in the earnings next week, and if we continue higher, that's great. And 400 would be the target. I did do a video on Facebook, and I think I've actually still got the stuff there, as you can see. The analysis is still there. So, in the next sort of 2 years, should I say, a year and a half, I do see sort of $520 being hit. But we've had this massive rally. I would like to see a pullback first. And given that we had a 5% rally on Friday, I'm sat there thinking, do I want to go long now? It's a very, very risky move to be making. I want to see a pullback, but at the same time, there's going to be a lot of people getting FOMO, fear of missing out. They're going to be buying at these high levels, and then potentially we see that crash, and then we see selling, and we see people dumping the stock, and we see it fall further. I think I would prefer to stay out of Facebook. Out of all of the big tech companies, the only one that I'd be buying is probably going to be Apple, just on the basis of it's overbought as such, but it has that little room to run, whereas Microsoft, Facebook, they're looking a bit overbought. Amazon is another one, but they're not releasing until Thursday, which means we will have had the FOMC statement. Since then, we'll know if interest rates look like interest rates are likely going to stay where they are, but we might see QE tapering, which basically means they're going to be changing what they buy, which could change the liquidity in the markets. If they tighten QE, then we could potentially see markets go down. If they loosen it, they could see markets go up because you're going to be putting more money in the economy. It's unlikely, though, that I think that's going to happen. I think they're going to tighten it because these markets have been going up, and it's just difficult to say what's going to happen. It really is. And next week is going to be it's going to be a risky week for anyone buying into these stocks. If you own them, hold them. But if you're looking to get in, I would probably wait until just until Thursday, after we've got the bigger names out of the way. We've still got a few big names left, and then just to see if they pull back. If they don't pull back, then we're probably going to continue higher. Now, looking at Amazon anyways, we want to be targeting that higher of around 3,800 a share. A break above 3,800 takes us towards 4,000. There's a very good chance that 4,000 will be hit, and I'm sure Mr. Bezos will be happy. He'll make a lot of money, billions and billions of dollars if it goes up to 4,000, so he'll be laughing. But, overall, I actually think that this is one of the best value stocks out there for the big tech companies. You've got Google flying up, Facebook flying up, Amazon will have been doing probably record sales, but yet the stock isn't going through the roof, which is quite interesting. So I actually, out of most of the companies, Apple and Amazon probably are the best ones to have your money in at the moment, because I think that it has that potential. It could very much rise 5, 4, 5, 6% and still not be overbought on the daily time frame, and potentially just turn positive on the RSI. Even if we look at the weekly time frame, I don't believe, again, we're not overbought on the weekly. On the monthly, we are, but there's potential to run a lot higher first. But this is quite a good stock. I think that Amazon has a lot higher to go, and if we do pull back, we've got so much support below 3,500 first, and then we've got all the moving averages all the way down to 3,350. Worst case scenario, $3,000 is going to be your sort of barrier, which is a 15% drop, which is unlikely. I think that it's very likely that this stock will continue higher, and I would like to see it. So in terms of what I'm looking for next week, I do want to see, I'm going to sort of stay on the sideline, should I say, until Wednesday afternoon, once I've seen the big names come out and the FOMC, and then on Thursday I'll probably look to place a trade somewhere in the Nasdaq or somewhere in one of those companies, I've just looked at. So some of the other ones that I haven't gone through just yet, I'll just quickly scan over. Boeing will be interesting. I'm not a buyer of it. I'd rather be a buyer of Airbus, just because of the 737 and the fact that plane demand is probably going to be lower than usual. I'd rather be a buyer of Airbus. We've also got NatWest. I don't usually short shares, but if I was going to short this, I would actually short NatWest, and that's because the government just recently announced, or the UK government, they did just announce that they wanted to pull their existing percentage out of the stock. As you can see, we've been in a downtrend since 2014, and it goes even further back, to be fair. You could go back to sort of 2010. We're just in this downtrend, and if we look at the daily time frame, again, we have to break £2.15. I would take a short, and I don't really short stock. I don't think I've ever shorted a stock, actually, to be fair. I would actually take the risk of taking a short at £2.12 on NatWest with a target of just 190 or whatever, and that's because I don't think it's a strong bank. I think it's quite a poor bank. Barclays, on the other hand, is a bank that I would like to be a buyer of. I think that they're very big, but again, it's the same situation. The stock is just falling. But we do have the 20 and 100 period moving averages underneath, which means we could potentially see that bounce. And it would be nice to see the bank break out, but it's unlikely that will happen anyways. So these are the companies that I'm focusing on. There are so many other companies that I'll be looking at, or sort of other index funds. There'll be some Forex that'll be all over the place. Commodities, I've been looking at gold recently. I reckon next week is going to be the week for gold with the FOMC statement. If the dollar rises, then gold is going to fall. If the dollar goes up in value, then it's likely that if the dollar goes up, then gold will fall. If the dollar goes down, gold will go up. It's a very dollar dependent commodity. We are just sat in this range, and we need to break out for gold. And I think it's a very, if we do fall, 1750 would be the target. I think that we're probably going to drift lower until Wednesday, but I wouldn't be touching gold. I tried last week and I lost a bit of money on it. I just don't want to touch it. That's it. It's as simple as that. I'm going to wait to see for a breakout on gold. Silver is the same situation. The problem is we have broken silver on here. We have broken this trend line. We haven't done that with gold just yet, but silver could potentially give us an indication that we're going to go further. We've got oil as well, so we do have the usual numbers. Again, I'm trying to stay away from oil because there's nothing that appeals to me. And then we go towards the Forex category, which I don't trade it myself really, but we've had a quick look. The pound looks like it's probably going to fall in value, which would indicate that the dollar would probably go up, and the euro we do have support here around 116. So there's a good possibility we could go a little bit lower, but we do, interestingly, actually, we do have a positive MACD, even though we're trending lower on the daily, which actually could suggest that we could break higher. If we break higher, the dollar goes down in value, and the gold, or the value of gold, goes up. So it's going to be such a good week next week for traders or anybody invested in the markets. I'm going to be keeping a very sharp eye on a lot of things this week. This is one of those weeks that you could make a lot of money, or you could lose a lot of money, and I'm hoping that this week is going to be a week where potentially we make a lot of money, but it is going to be a really, really tough week. So it's the 26th of July. My name's Tyrone. Just keep an eye on the website, keep an eye on the YouTube. I'll be doing plenty of videos, plenty of posts about things that are going to potentially be happening. We have a free WhatsApp chat as well, so that you can keep up to date on that. But that's everything. Thanks for watching.